Hello and welcome to today's class, lesson 2. We're going to be learning on the two kinds of entry models there are when trading smart money concepts. We have the aggressive and now the entry confirmation entry model, right? So the first one you need to understand is aggressive entry when trading smart money concepts. So what is an aggressive entry? An aggressive entry simply is when a trader enters a trade immediately after price mitigates a demand or supply zone without waiting for a lower time frame confirmation like a change of character, a break of structure showing intent of price moving in a direction. The trader anticipates that the zone will hold and price will react from it. So just an example in the chart so we can see the kind of entries there are. So we have essentially two kinds of entries like we have here. Let me show you guys. We have, let me take this off. So we have the aggressive entry and we have the conservative entry. So essentially this is how an aggressive entry looks like. When price comes to your zone, the zone you are trading off, you are not waiting for a confirmation. Simply put is you are entering aggressively once you see a mitigation on your higher time frame zone, in this case your supply zone. So immediately you see price mitigate your zone, you are in and you're already taking this trade, whether you get a stop out or whether price goes in your direction. That is an aggressive entry. But when you're looking at a conservative entry, as you can see here, right, a conservative entry is you waiting for extra confirmation to know that price is really going to go in your direction. So you can see here, this is the same trade, but what happened here, when price got here, we immediately took that sell as aggressive traders. But as conservative traders, once price gets to our higher time frame supply zone, we are not immediately selling off like we did in the previous trade. We are not immediately selling from here because we are not sure price is going to go in our direction. Price might invalidate the zone or price might respect it. So for us to be sure is that we'll wait for extra confirmations by going to the lower time frame to look for the same thing that happened on the higher time frame but on the lower time frame. So you know that price is fractal. What that means is that what happens on the higher time frame happens on the lower time frame, just on a bigger and a larger scale. So here we're going to wait for price to do the same thing it did on the higher time frame but on the lower time frame, and this gives us a confirmation that price is willing to go in our direction. What was that confirmation? We see that price inside of this supply zone, right? Inside of this higher time frame supply zone, everything is going to happen inside of the supply zone but on the lower time frame. For example, this could be your 1 hour zone, right, and then this could be your 15 minutes, or this could be your 30 minutes, and then this could be your 5 minutes or 15. So wait for price to break structure inside of this supply zone after the mitigation. And the two most important highs and lows when you are trading conservative, right, is also called confirmation. So you can say conservative entry or confirmation entry. The two most important zones are the last high before price mitigated your demand or supply zone, and the last low after the mitigation happened. So this was the last high we have here, the last break of structure. Let me zoom in for you man to see. So yeah, so this was the last high after price so this was the last high after price had mitigated this zone. Let me just put this in perspective. Yeah, so this was the last high after price mitigated this zone, and then this was the last low. I'm going to mark this out. So this was the last low, giving us a change of character, right? So when price takes out this low and price begins to sell, now we know that okay, the market is willing to go in this downward direction. Then what we'll be looking for now is a supply zone that price would leave behind. Most often than not, price will always leave a zone, right, an order block when it has had the entry, the mitigation on that higher time frame. So after we see this change of character, we are going to go to our lower time frame to now look for the other block price left behind. Don't worry, I'm going to show you cherry-picked examples in the live market so you can see in hindsight what it actually is like. So we'll look for the other block price left behind, and then we'll wait for our confluences, the regular confluences we use, the liquidity inducements, and then we get a mitigation, and we have our trade here, and then our stops at the same place. So this is essentially how it looks like, right? Let's go back to the definition. So the pros of aggressive entry. What are the good things about trading aggressively? Number one is you rarely miss trades, right? So you enter as soon as the zone is mitigated, so you are not waiting for any other thing. A price can just go in your direction instantly. Number two is fast execution, which is ideal for scalpers and very experienced traders. Number three is it's good for high probability zones that have strong confluences. And number four, it helps you catch the entire move from the very start of the reaction. So you are not waiting for anything, you are riding the whole trend, you are riding the whole move, so you are not missing anything. And then of course, what are the cons of aggressive entry? Number one is no confirmation. So price can break through your zone, which might cause a loss. So price can come to this zone, and before you know, you are stopped out, right? So that's the con of aggressive trading, is that there's no confirmation. And number two is low risk to reward and larger stop loss. So can you compare the risk to reward? This is a 1 to 5, and this is a 1 to 7. So because our stop loss is large because of our big zone, our stop loss has to be large as well, and our risk to reward will be affected, making it not as much as a conservative entry. For example, we have a 7 to 7.29 risk to reward, and here we have a 5.15, and then it can result in multiple stop outs before the actual move begins. Yeah, so that's it for aggressive. Let's go to conservative entry. I think I'm more connected to conservative because that's what I trade, and I think I'm conservative in my trading style. So a conservative entry is when a trader waits for confirmation, like a change of character or break of structure, after a higher time frame supply or demand zone has been mitigated before entering a trade. This ensures price has shown intent to move in your direction. This so yeah, this moving in direction. Yeah, so basically, like it says, a conservative entry is waiting for a confirmation after the having of mitigation on the higher time frame supply or demand zone. You are waiting for the confirmation that price is going in your direction. And what is that confirmation called? It's called a change of character. Change of character. Right, that is what we call the confirmation, which is this move that happens after that mitigation. Yeah, so the pros of conservative entry is you have higher probability setups because you wait for a confirmation. You wait for price to show that it's really going in that direction. Number two is you have a higher risk to reward because your entry is refined after your confirmation. So you get a tighter stop loss and a higher risk to reward. Number three is more confidence in the trades you take. Since your market structure aligns with the direction, after you see that change of character, it aligns with where you are selling or buying towards, right? And number three or four is it reduces fake outs as you avoid entering too early. Number five is safer approach for beginners learning price action. So basically, it's self-explanatory. And then of course, what are the cons of conservative entry? Number one is that you may miss trades if price reacts and leaves without giving confirmation. So price wouldn't always wait for a change of character, a confirmation. Sometimes when the move is happening in the market, like price can just shoot down without giving you any confirmation or any space for entry and all of that. Maybe you could see something like this. Let me send this to back. Yeah, like something like this. If you go to your lower time frame, maybe let's go to like the 15 minutes. So you can see this mitigation already happened here. Let me just show you. So you can see the the mitigation already happened and then price sold all the way down. Now in this particular setup, there wasn't any like confirmation, right? Like price didn't show that, okay, yeah, there's a break of structure, another one, a change of character. Can you see immediately price got to this zone, what happened? It just sold off all the way. So you would have missed this whole move waiting for a confirmation entry. Of course, along the way you could look for confirmation trades around here and all of that. So these are the pros and cons of trading conservative entry. So my favorite part, let's go into the live charts to see and spot out these confirmative and aggressive entry types on the live market. So we're going to start with the first example, which is AUD/USD, one of my favorite pairs. These are cherry-picked examples so you guys can see, but they happen every time. So when you understand the concept, you're going to be more aware of them in the live market. So let's replay price. So this zone. All right, sweet. So let's go to the 1 hour time frame. The aggressive unconfirmation type of entry works in real life. So this is the live chart and this is our first example. So you can already see our breaks of structure and all of that good stuff here. Price has broken this structure with impulsive moves to the downside, and this is an example of a sell setup, right? So this is an example of sell setup. We're going to see how it looks on the buy scenario. So we can also see that there is an order block here as well, like a higher time frame supply zone that initiated this move. So if we were to trade aggressively, right, if we're aggressive traders, this is where our entry would have been, right? If we're trading aggressively, immediately we saw this, because this is also a very good trade setup, right? And mind you is that like both entry models are not 100%. They don't always work out. Like every strategy is not 100%. There's no strategy that works out 100% of the time. They all have their pros and their cons, and they work for everybody who decides to trade that strategy or that entry model type. So we have our liquidity save and our break of structure. If we're aggressive traders, this is where our entry would have been. Immediately we saw price mitigated this zone. We are not waiting for any other type of confirmation. We are just entering and we are waiting for price to deliver. So can you see what happened? Price tapped us and immediately started selling off. But as a conservative trader, what you will do is, okay, price has mitigated my higher time frame zone. After you see this mitigation, the next thing you're looking out for is that next break of structure to the downside. Since this is a sell scenario, you're looking for, where is this break of structure happening? Immediately the break of structure happens, what your next move is to start looking for the nearest supply zone. So where did the break of structure happen? Like I said earlier, we have it here, right? So this is where the break of structure happened. Where is my nearest supply, or my nearest supply zones? So we have two zones here. We have one, right? We have one, and then we have two. This is number two. So now a lot of people get confused in scenarios like this, like what zone are you going to trade off? And I'm going to teach you in the next class about premium and discount levels. So we'll just leave that for now. But since understanding the concept of premium and supply, you're going to see that premium and discounts, rather, you're going to see that this is an inducement, right? Because price is most likely to run over this zone and use it as inducement or liquidity to go to our more extreme supply zone. So as a conservative trader, we are going to go to our lower time frame, like maybe the 30 minutes. So this is the 30 minutes view of what price is showing us. So you can see the order block, but I would prefer on the 1 hour time frame, or we could even check 45, but let's leave it on the 1 hour time frame. So on the 1 hour time frame, this is how it looks. So remember, aggressive traders are already in this trade, and we're just going to put their position here. Their stop loss is above the zone, their take profits at the most recent low. So aggressive traders are already in, but we are conservative. So what we are doing now is that after we have seen our break of structure, we you have seen our inducement. Remember, it's literally the same thing. You're just looking for it on the lower time frame. Price is fractal. Whatever happens on the higher time frame happens on the lower time frame. So we have the same confluences, break of structure, we have liquidity sweeps here as well, we have an inducement here. So let's just play price now and wait for that mitigation to happen. So price created this liquidity here, and then let's keep on playing price. Boom, we had this entry. Price already triggered us in this trade. Yeah, so price already triggered us in this trade. Our stop loss now is not going to be here. Why? Because new structure has happened. Price has created this new structure for us. So our stop loss is above the most recent order block high, no more this one. So this is where our stop loss is going to be, and then our take profit is going to be at the same TP area. Price was going down, and kept on trading in our direction. This trade ended up being a loss, right? But if you had taken your partial profits or broken even, you would have gotten something out of this trade. That's to show you that it doesn't work 100% of the time, but it also has a very high probability win rate as well. Yeah, so the next example on Euro USD, like we already did in the last class, this is the higher time frame. Price is going down. We can see some supply zones here, but I'm going to be showing you the one we are going to be using for this trade, the most recent supply zone that has already gotten mitigated. So if you can see closely, you can spot this zone here. Let me send this to back. Yeah, so you can spot this supply zone that just got mitigated here. So this is a supply zone that just got mitigated, and an aggressive trader would mark out his breaks of structure, like here, this minor break of structure here, his liquidity points, like all of this here, and then his entry would have been at the open or the first mitigation of this zone, and his stop loss would be at his take profit rather will be at the most recent low. So this is an aggressive trader's perspective. To them, there's no need for confirmation. All they know is that once price has got into their supply or demand zone, they are in it for their sell or their buys. So you can see price already moving in that direction. But if a conservative trader was to take this trade, what he will say is, price has mitigated my higher time frame zone. Let me break down to something like my 15 minutes to see if I can get a re-entry. So we're going to use the 30 minutes rather than the 15 because the other block isn't really clear there. So remember, this is the higher time frame supply zone that the aggressive traders have already sold from. So we're just going to put this here so we don't forget. Aggressive traders are already in the trade. So yeah, aggressive traders are already in this trade, and price is going in their direction. So for us conservative traders, I'm going to replay price so that you can see how this trade happened. So remember, I said the most important high and low is the high before price mitigated your higher time frame zone, and then the low after the mitigation, which is this low, giving us the change of character. So this is the higher time frame zone, keep it in mind. But now confirmation or conservative traders are waiting for that change of character. And where's the change of character? That price just took out. Let me just label it change of character. So this is our change of character, and the next thing we're going to be doing is waiting for that retracement, right? So if I take price here, you could see price was retracing to where? The most obvious supply zone, right? Let me send this to back. The most obvious supply zone. I said most often than not, when price has given that confirmation break, it would always leave a supply zone or a demand zone for you to trade off. So we are not going to consider this week for our stop loss because the probability of price getting here is low, right? If price gets all the way into this trade, it's even a sign of a reversal. So we are not considering this week for our stop loss, that is. So now price is retracing to the most obvious supply zone. What I'm going to do as a conservative trader is already set my limit order here, my stop loss above this high, and then my take profits would be probably at the most recent level. If you want to be so conservative, you can go here, here, or here, but let's just leave it here for educational purposes. So now remember, aggressive traders are in this trade already. Conservative traders are waiting for that confirmation, and let's see what price does. So boom, price has mitigated conservative traders, and let's see how it plays out. So you can see price is trading in this zone, making a series of lows and highs as it's going, and it just keeps melting down until the final take profits. So yeah, basically, can you see the difference? So as a conservative trader, this is where your stop loss would have been here, but as an aggressive trader, your stop loss was going to be above the high of this order block here. So your stop loss will be above the high of this order block here, giving you a what? If we are taking our profits here, this is going to be a 1:2 trade risk to reward for an aggressive trader. But you trading conservative, your stop loss is above this high, your take profit is at this take profit zone. You have a higher risk reward of 1 to 3 and a tighter stop loss than somebody trading aggressive. So let's just see how this trade ended up. So price has hit take profit around this, so you can just see how it works, right? Once you get a mitigation on your higher time frame zone, your demand or supply, you are breaking down to the lower time frame to look for the same thing, the change of character, the break of the last high before the mitigation, and then you are following all the way down. So let's look at the next example. So our next example on GBP USD, this is the 2 hours time frame. So marking as our most obvious supply and demand zones, this is our demand zone. So this is going to be a buy scenario to see how the aggressive and conservative works. So our liquidity sweep here, then our breakout structure. Yeah, so remember, where would an aggressive trader enter from in this trade? This is a buy now. An aggressive trader immediately gets a mitigation, is going in for this trade, stop loss below, and then take profits could be at the most recent high or here. We're just going to use this zone. So for an aggressive trader, this is a 1 to 3, and mind you, an aggressive trader is already in this trade, but now we have gotten a mitigation. As conservative traders, what we will do is go to our lower time frame. Right, so let's try the 30 minutes, and now price has mitigated the higher time frame supply zone, and aggressive traders are already in this trade. Yeah, so next thing we need to do is, remember, you are looking for the most recent high and low price forms before mitigating your demand zone, or when mitigating your demand zone, and then the last high after price mitigated your demand zone. So this is the low price took out when mitigating our demand zone. So this is going to be our liquidity sweep, our breakout structure to the downside, and then the other high we can see is this high, which is going to be our change of character, because price has broken this high, showing intention of moving to the upside. Now we are getting our confluences for this confirmation entry, right? So price has broken structure to the upside, giving us the change of character. Now the next thing you need to look out for is, where is the closest demand zone, or the price leave any demand zone at all? If you can't see it on one time frame, you switch to that time frame. Let's try the 15 minutes time frame. Yeah, so this is the 15 minutes time frame, and you can see, do we have any demand zone? Yeah, you can see a demand zone here. So we're going to mark this out as our demand zone. Good. Now let me put our aggressive traders so that we can keep them in mind when we are analyzing. But yeah, so now we are going to wait for price to come back to our zone, mark our liquidity or inducements, set our limit orders, your entry, your stop loss is at the low of this order block, your take profits is going to be, it could be at the same level. And can you see the big difference? Look at this, is a risk reward of 2 to 2.76, 1 to 2, right? And then this is a risk reward of 1 to 6. So you can see the difference. This is like higher risk reward compared to this. So we have set our limit order and we're going to wait for a mitigation. So boom, price has mitigated us into this trade, and we're just going to wait. After price has mitigated, price is buying up. So after the mitigation happened, this is kind of slow, so let me just play this for you to see. So can you see what happened? Price went all the way to take profits. If you had let's say we close out here, an aggressive trader would only make 2% of this trade. A conservative trader would have made 6% of this trade. So it's just the same thing on and on all over the charts. And I'm just going to give you the process again. The process from the beginning is spot out your higher time frame demand or supply zone. After you get a mitigation there, you're going to break down to your lower time frame to look for a change of character. If it's a buy scenario to the upside, if it's a sell scenario to the downside, and then look for the same thing that happened on the higher time frame but on the lower time frame. Price is fractal. Whatever happens on the higher time frame happens on the lower time frame. So this is basically how aggressive and conservative trading works.